Welcome back. It's time for Hot Stocks. Now, electronic and electrical equipment company South Ocean reported an 8.4% decline in headline earnings per share to 30.6 cents for the year ended December. Turnover increased by 10.8% to 1.3 billion rand, but operating profit declined 14.5% to 75.7 million rand. Looking ahead, the group said government and Eskom's commitment to increasing spending on infrastructure will create opportunities within the group. Craig, I'm beginning with you this time. I guess the headline I would write, if I were writing up this one, I would say, waiting for the government.
Look, I think certainly construction spend is going to help the company, but that's not the whole story. I mean, they have been hampered by a falling copper price. It's always difficult to know exactly when to buy their stock and how to move it. So regardless, even if construction is doing well and the copper price is falling and they've stocked up, that can affect them. So there's a lot of commodity play in it. But what I really like about the story is the NAV, the sum of the parts valuation of the company, and that's what really excites me. If you think about it, it's got a market cap of 280 million. It's sitting on inventories of 250 million. That means you're paying 30 million rand for the rest of the business, unless I've missed something. And if you look at valuations, ARB have just brought Eurolux, which is one of the biggest competitors in the lighting side. They paid 81 million for that. That implies a value of 135 million. Now, Radiant Lighting is a lot bigger than that. Probably we could estimate 250 million fair valuation. If you look at the comparison of Aberdare, how it's valued in the Altron stable, and then on their cable side, you're probably looking at another 250 million valuation there, and then you've got your property side. So it's got an NAV of around 5 Rand a share, and it's trading at 1.80 Rand a share. For me, that's really what makes this worth looking at. Yeah,
Craig really likes this stock. He's just laid out a case here for a company that's just waiting to take off if, and it's a big if, the government comes to spend. But he's also saying there are other parts to this story that he likes particularly. But isn't a tiptoe into construction at this stage really a gamble, given that we really haven't seen it take off, despite the numbers that we've seen coming from government from 500 billion to 800 billion, now we're talking $1 trillion in infrastructure spend?
Look, this is the lowest cost copper wire producer in the country. And through the full down cycle, they've been able to keep their factory running at 100% capacity. I think this is just a most incredible story. I think there's massive operational leverage to increased volumes and higher prices. At the results presentation today, they said that copper wire prices are at rock bottom. A lot of capacity in the industry has been taken out. We think that an award of a 16.5 billion rand Eskom contract, which is in the offing, should be awarded by the end of July, will have a profound impact on the copper wire manufacturing industry in South Africa. We'll go from an overcapacity to an undercapacity, and they'll get pricing power back into the industry. And you could see margins widen dramatically. So the copper wire business, I think, is very exciting. There's massive operational leverage to higher prices and increased volumes. We think that margins have the capacity to double. On the Radiant electrical distribution business, electrical light fittings business, it's a market dominator. It has about 30% of the market. We think that there's massive growth potential into Africa. It consistently performs, this business. They managed to take 9 million rand of costs out of the equation. We think all around that this company trading at 180 cents, it's significant discount to its tangible NAV of about 2.85 Rand, has massive upside from here.
Anthony, I'm getting worried here because now there's just upside that I'm hearing from you two guys. So the answer that you're going to give me is hot.
This is red hot, white hot. This is a great story.
Should be picked up.
Yeah.
Craig, did you hear that?
Yeah, absolutely. Look, I agree. In fact, the problem with the share is I actually own personally quite a lot, which I picked up at about 1.30 Rand and eventually sold them out at 1.40 Rand, but it took me 3 days to sell it. So it's not the most liquid of shares, and in retrospect, I should have held on to it. But I saw other opportunities. But that is the problem. It's a small cap. But in terms of paying for a company at this price, and if the construction sector moves, I mean, you're really picking it up at a steal. And what they're
Absolutely.
doing with their Caliber business in Hong Kong, it's a very small operation. I think it's really one employee. They're looking at buying stock, but that's also going to be the growth into Saudi Arabia and into Northern Africa going forward. So, you know, this company, they've got a lot of Asians on board and they think like Asians. They've got a 5-year and a 10-year strategy and a plan. And as an investor, you need to sit there with 5 years and 10 years and see them play out that strategy. They're not thinking about the next 3 months or the next 6 months. So you can't invest in the share with that type of outlook. But really, it's an excellent price for this quality company.
Yeah, Craig, I haven't had a more ringing endorsement of your company. This is red hot from both you guys.